Hello my fellow freedom builders and welcome back to the channel. The video today is about free oil. Who doesn't want some free oil? Well, today you can get it. We have witnessed something very special today, and that is the reason why I make this video. I would actually have made a video about stop losses and the dangers of using that tonight, but that will have to wait till tomorrow. Because tonight, we have witnessed something extraordinary and historically in the oil market. Because 1 barrel of WTI crude oil has gone negative. Meaning that if you would like a barrel of good Texan crude oil, by taking that barrel, you would actually get money for taking it. And if that sounds completely insane and ludicrous, it kind of is. But what I will do in this video is that I'll try quickly to explain how it has come so far and what kind of implications we can imagine would happen out of this. But I just took a screen dump of my TradingView screen here tonight, and as you can see, it says 1 cent for 1 barrel of WTI crude oil. And that is simply because TradingView apparently doesn't have the ability to show negative pricing, which makes sense, because why would a physical commodity have a negative price? But it has come so far. So let's have a look at how, and I'll try to explain it as quickly as possible. All right. What we can see here is a little scenario that I have made. First of all, we have this virus thing that you all know about and that has spread all over the world, and that started in December, January, depending on who you ask, but it started to spread all over the world. And I should say that before this, United States, as you might know and remember, even though it seems like 100 years ago, they were actually in a big trade war with China, which left both of the economies very fragile and not in such a good shape. So then along comes this virus. And what happens with this, and you know that if you live in some part of the world where that is necessary right now, we need this social distancing, meaning that all of a sudden we are very aware that we should not be too close to other people when we are shopping and so on. And the result from this social distancing and stay-at-home orders and so on is that the demand for goods are dropping, and it's dropping quickly. We saw in China when we saw the retail sales numbers from, I think it was January or February, where they saw year on year, meaning the development over 12 months, we saw a 20% drop in retail sales. And I imagine that something like that will be coming to United States and Europe as well very soon when we see the new numbers, and we'll see that the GDP numbers are dropping like a rock. So the demand for goods is dropping. And the thing with these goods, of course, some of the stuff we buy is digital products, but at least most of the product we buy, and that is food and clothing and cars and so on, they need to be transported to where we are. So when we see a massive drop in demand for goods, we see a massive drop in oil demand. So all of a sudden, all the super tankers or container ships, they would no longer need to transport as much goods from China and all over the world to the United States and Europe. So that made the oil price drop in of it itself. But then comes along Russia and Saudi Arabia. And they thought that this was the right time to have a nice and quick little oil price war. So it's not really clear who started what and who said what to whom, but anyway, just a few weeks ago, Russia said they wouldn't participate in this big OPEC plus deal. so they would keep producing as much oil as they liked. So Saudi Arabia got really, really mad, and they said, well, then you can have it as you like, and we will start to overproduce and simply flood the market in oil. And they did, and the oil price dropped 30% just over a weekend. And that oil price war has, of course, escalated and made the oil price drop even further. We can see that the demand for oil has dropped due to this virus and the trade war and so on and so on. We can see that the demand for oil has dropped around 30 to 35%, meaning that normally they use 100 million barrels per day, but that has dropped around 35 million barrels as far as I can tell. So that means that when the countries keeps pumping as much oil up from the ground as they're used to, because they need to sell a whole bunch of oil because they have some really bad fiscal numbers. They have this fiscal break even, meaning that, for instance, Saudi Arabia, they need an oil price of around $83-84 per barrel for everything to go break even in their fiscals, in the budgets for the country. And when the oil price drops, they need to sell some more oil, and that is such a bad cycle to get into. So they decided, the OPEC Plus and OPEC Friends and so on, all of the oil producing countries, they decided to make a production cut where they would cut 9.7 million barrels of their daily production. That's around 10% of normal daily production. But that doesn't help much if your demand for oil is only 65 million barrels and you're still producing 90 million barrels. That leaves a surplus of 25 million barrels each and every day that needs to be stored somewhere. And that is here. We can see these huge oil tanks here, storage facilities. And what happens when you have 25 million barrels per day in surplus production, then you can see that your storage are actually getting filled up very quickly. And you can see here that, of course, they cut the oil price, but that doesn't really help much if you're still 25 million barrels per day on the wrong side. So the storage capacity is pretty much taken now. Every single tanker ship, every single onshore storage facility is filled up with oil. There is not much left to put any oil in. And then comes the interesting part as for the oil price from today. Because oil is traded in futures contracts, and here we have today we have the May future contracts that runs out today, meaning that the one sitting with this future contract will actually have physical oil delivered tomorrow, or at least in a very near future. And that's a problem because there's no more storage facility. So normally a country or a big oil company or a company that uses a lot of oil in their some sort of production, they would have large storage facilities where they could just buy some cheap oil and put it in. But all of these companies and all of these tanker companies, they have rented out their storage capacity now. So everything is gone. Meaning that the ones sitting with the oil futures, the May contracts, they would actually have oil delivered tomorrow. And no one wants that. No one has the storage capacity. And we should also remember that normally a huge part of the trading in oil futures is actually done by speculators, Wall Street traders, and so on and so forth. And imagine this Wall Street trader sitting in his office with a lot of oil futures May contracts, and he can see that if he has them when they run out today, then he has to take several million or maybe several million barrels of oil to be delivered. Where exactly? In his Wall Street office, or I'm not sure where he would want that delivered. So he wants to dump these futures contracts as quickly as possible. And that leaves us with the last sign here, free. If we actually end it with free oil, or more than free actually. Let's see here. As you can see, I took this from, I think it was Yahoo Finance. We can see that the WTI crude oil price of minus $28. That is absolutely insane. But it is logically it is a logical structure that brought us here, because it was all of the storage capacity was filled, and the futures contract for tomorrow, if someone would own that, they would have to be able to take the oil. So people are, because there are such small storage facilities left that are free, they say, well, then I want some money for taking your oil, because I know that you are desperate, dear Mr. Future Seller. So if you want to get rid of that futures contract and you want to avoid to being delivered to tomorrow, well, then you will have to pay me for taking the oil off your hands. And that is the reason why we all of a sudden ended here. Well, if you're looking at some of the contracts further out, they are not in negative, and they haven't dropped as much. We have one of them here. I'm not even sure which one of the contracts this is, but it doesn't matter. It's a bit out in the future. It might be a July or an August contract, something like that. But what we can see here is that they have also dropped dramatically, but they are quote unquote only just around $17. So many of these contracts are being around $17 or $20 right now. You can see this big spike in oil price here. That was when Donald Trump went out saying that Russia and Saudi Arabia had this huge deal coming up and so on. And people figured out that it might be a lie. Well, it actually came to a deal, but it was an extremely insufficient deal, so it just kept dropping. And that is what we can see here, and it will probably continue. A while back, I said to my subscribers that I thought the worst case could be oil around $10. And well, tonight in the May contract it got way worse than that, but this one, just the standard, a bit further out in future, they are at 17 now, but that could easily drop to 10 as well. The reason for that is that there's still no demand for oil, and they're still producing 25 million barrels more than they use every single day. So there'll be a huge time span where there'll be way more oil in the world that we need. Then there is the oil cut deal that I think is a joke in itself, because it only starts the 1st of May. And up until that, the countries can produce as much oil as they like. And I know that Saudi Arabia, they are producing insane amounts of oil right now, and they are putting it in oil tankers, meaning that after the 1st of May, they can keep flooding oil out over the market. Then we can see that, of course, they had this coalition of oil-producing countries, and they got pretty much everybody on board, even Mexico. But if you're looking at these oil cut deals, historically, they are not very solid. It will not take long before one or two of the countries are in such dire need of cash to pay their bills that they will start overproducing. And as soon as the other countries are finding out that just one or two have broken the deals, then the rest of the deal collapses and they all go back to producing just as much as before. So I am not very positive on the oil price for the next at least the next quarter. Now we will have to see how quickly this virus thing goes away. I really, really hope that they come up with some solution as for a treatment, vaccines, and so on, and that the isolation, the stay at home orders are starting to kick in, at least in the United States. But I saw some numbers from several places in Asia and also Africa where they think the next epicenters will be. So it is just a matter of time before we see somewhere new in a new place in the world. It could be India, it could be somewhere in Asia, it could be Africa, it could be starting up somewhere else, Russia, Europe again, if there's a wave 2, it could be anywhere. And depending on how long all of this takes, how long all of the social distancing, stay-at-home orders, shutdown of entire countries, if that starts to loosen up, we might see a rise in oil price. And if all of a sudden news comes out of a treatment that really helps or a vaccine that is proven, then we will probably see a spike in oil prices just because people start to anticipate some sort of rise in the demand for oil. But right now, I simply cannot see where that demand should come from. And even if there is a bit of a rise in the demand for oil, they have so much oil storage that you won't believe it. If you want to know more about the news from the oil industry, this website, oilprice.com, is the place to go. It actually just crashed tonight when everybody wanted to see what all the fuss was about, what the price was for oil. You can see here, $0, oil forces Canada to shut down crude production. I think that is the oil sands. Yes, that is the oil sand production. So they have to shut it down. I saw some rumors that they were negotiating in the United States. They were negotiating with some of the oil producers, and the rumor was that the government would actually pay the oil producers for keeping the oil in the ground, simply not pulling it up. And that is a really crazy development. Then we have something about Saudi Arabia, flood of Saudi oil to hit US shores as prices hit $10. So there's absolutely no shortage of oil, and even more is getting into United States right now. And of course, when we are thinking of the stock market, as we of course are, then this ought to have some sort of impact on the stock market. But then again, I have been saying that for a while, that I think the stock market should go down. Let's just have a look at the Dow Jones for today. It is down a couple of percentages, but nothing really dramatic. But there could be something from the oil sector spilling over, because a lot of the oil sector, especially the shale oil, the shale gas companies, they are financed by junk bonds, and that is high risk bonds. And if they all of a sudden go out of business, or they cannot produce because $0 for a barrel of oil is insane, well, then when they have to refinance, and a lot of the junk bonds is to be refinanced this year, then they will have to refinance to a way higher interest than the 6 to 7% they have been financed at so far. I saw some junk bonds shooting up at 26, 27, 28% to get your production financed, and that is simply not that is not reasonable, and no business can run with that sort of interest payments. So a lot of the pension funds, a lot of the hedge funds and so on that has been financing these shale oil companies, they will be in big trouble, and they might need another bailout. And so we'll see a bailout on a bailout on a bailout, and we'll just see the Fed keep printing money. As you know, I have been buying stocks for the last while. If you have been listening to my videos, I've been buying some stocks in the Danish market, but that is because I'm getting buy signals. And even though I think the market is going down, and I simply cannot fathom why it is not going down. Of course I can, because the Fed is printing an insane amount of money, but in my mind, in my philosophy and the way I think, the market ought to be dropping really much right now. But it isn't, and that is because of Fed and ECB, of course. And we might see it. I draw this bear flag here on the Dow Jones, and if that gets broken violently down here to around 22,000 or something like that, I suspect that we'll see a drop way further down. But right now, the big history, the big story in the market is the oil price below zero. That is something I thought I would never experience in my entire life. And I hope I don't experience it again. It is a kind of a shocker. And this ought to be affecting the stock market somehow. But then again, the old saying of never fight the Fed seems to be true. And let's just see how the markets react in the upcoming days. If we see the new job numbers, the job numbers coming on Thursday again, if we see again a multi-million number of new people unemployed, if we see 4, 5, 6 million again, sometimes something has to give. And I simply cannot see why the stock market can be sitting on these levels. But then again, I think it was the Keynes who said that the market can stay irrational way longer than you can stay solvent. Meaning that if you short the market right now, expecting it to go down, well, then you can be sure that it can't stay irrational and keep going up way longer than you have money in your account. So take care out there, really look out for your money and for yourself in this environment. And I will get back to you with an update depending on how the oil market pans out in the coming days. So kind of quite a shocker this evening. I simply did not see this coming, and I don't think many analysts did. So take care of yourself and your money out there, and I'll talk to you again soon. Bye for now.